Alright, I like the sound of money. Good evening, traders. Welcome to your 7-minute market update, utilizing technical analysis to predict direction based on human emotion. Today is June 21st, 2012. Lots to talk about, so let's get started. This is a chart of the SPY, which is the ETF that tracks the S&P 500. Alright, so what happened today and what's going to happen tomorrow, and kind of let's take a look at what happened intraday. Alright, so let me just delete these lines over here so I can get a little bit a cleaner chart. Alright, so what it turns out that this 135.44 level it's actually a substantial level. It actually held. I didn't think it would hold as good as it did. But we had a pierce and we closed above, so I thought that maybe there is a possibility that we could get to this 137 level. But I also said in the previous videos that anything in between these two lines, maybe kind of midway, which is this candle here, I'll probably take a short trade, and if we get into this 137 level, then I'll add to that short trade for an additional short, just because the markets are so volatile. I didn't know when the markets were going to start coming down. So what does that mean? Basically, the SPY came straight down, big day today. Big sell-off, $3.04 to be exact, okay, right into what? This 20 moving average. You see how awesome technical analysis is. It went right into this 20 moving average, and then we got a small bounce, okay? So yes, I took a small short in the SPY. I didn't take my normal short position on the SPY because I didn't think it would turn this easy. As it turns out, this 135.44 level actually held. So we got a reversal on the SPY, and it was a big reversal. Let's take a look at the intraday for the SPY. Alright, this is a 10-minute chart of the SPY. Starting from this candle here, which was the first 10 minutes, we actually gapped up in the morning because the E-mini features were higher, right? And then, actually, no, we didn't gap up. No, we did gap up. So we closed yesterday here, and then we gapped up here, and then from there, that's all she wrote. We had a down move, and then we had bearish consolidation, another down move, and then another bearish consolidation, and then a down move again, another bearish consolidation, and so on and so forth. You see how these bearish consolidations continue to work. And then we had a down move towards the end of the day. Now, what did I do? Well, I was going to take an intraday trade, but unfortunately I was unable to. But there was a nice trade here right at this pivot point here. That intraday for maybe 30 cents or so, 20 to 30 cents would have been a nice pop, a pullback. Again, this would be a counter trend trade because it was clearly in a 10-minute chart on the in a downtrend. So you would only take like 20 to 30 cents. At the same time, though, when I saw this move happen, I actually sold half my positions on the SPY. As you guys know, I'm also in addition to the SPY, I'm also short the XP, and I did the exact same thing. So this is the daily chart once again on the SPY. So I did the exact same thing. This is the line that I just drew on the intraday. Basically, when it went into this line, I really didn't think it would get into this 20 moving average. I thought it was just going to get close and then kind of just shy away. But actually went right into this level here. So I sold half my positions. So I believe I made about 30% on the American Express short, and I also made about 45% on the SPY short. I sold half, and what I'm going to do is what I did was I put a break-even stop on the second half, meaning I can get greedy now in the market because I'm playing with the house's money. I already took profits off the first half. The second half, I really don't care because that's basically free money that the markets has already given me. Now, so what do I think is going to happen tomorrow? Well, there's different options, and like a chess player, we want to make sure that we're aware of the different things that can happen, and we act upon the things that do happen. Okay, so here's the thing. Normally when you have a big down move like this, such as a down move like this, I always say that we may have a 50% retracement, or at least a 25% retracement. We are in a 20 moving average. I do think this is a minor support, however. Okay, so I do think that we may have either a small slight up day, a flat day, meaning in preparation for a bearish consolidation before we head down into this 200 moving average here, or we may actually negate this whole down day tomorrow as long as we close. Okay, let's just say we gap down tomorrow, and then we close above the 50% level of this candle here. In my opinion, that would be a negation, and it would be in a neutral standpoint from there. All right, so let's just say we get an up day, maybe a little less than 50%, then we have another down day on Monday, we have another up day, and so on and so forth. What is this? This is basically bearish consolidation again before we head down to this 200 moving average. Now you have to remember, in 2 weeks is 4th of July, or it's the week of 4th of July, and every Monday, Friday, and day before, day after a holiday, or the week of a holiday, is always low volume, or not always, but more than likely is low volume. Today we had 200 million traded, which is why we're able to drop $3. But when you have low volume, say 100 to 150 million, traded, like that gives the institutions the power to prop the markets higher. And a lot of times they like to prop the markets higher before holidays, and that's to get people to spend more money. Now, so there is a possibility that we may continue down throughout next week into this 200 moving average, in which case next week we may get a bounce up off this 200 moving average. Now, so couple options, right? Again, we consolidate, we go into this 200 moving average, okay? We go up and we negate the whole position, right? And if that happens, then I get stopped out with a break-even stop, no big deal. I made profits off the first half, okay? If not, and we continue down tomorrow, right? Then I don't think it's going to be a very big, a very big down move, not a down move like this. All right. I mean, normally when you have a big down move, such as this one here, we do get some sort of at least a 25% retracement, and a volatile market, maybe about a 50% retracement before we start consolidating for another down move. That's normally what happens. All right. But institutions, they're game players. All right. So the one thing that could lead me to believe that we may have a negation of this candle tomorrow is because Goldman Sachs released a short play, or Goldman Sachs basically said that they expect the market to go down a lot lower in the near future. Something like in the I forget the number, but when Goldman Sachs or the news or CNBC or JP Morgan, whoever the case may be, I'm always on guard when I hear things like that, simply because you want to be a contrarian when it comes to those kind of things. Because why would Goldman Sachs tell me that they think the markets are going to drop? Why would they do that? Well, simple, right? They think we're gullible, and most of us are. But I'm telling you now not to think gullibly, right? Yes, the markets could continue down a lot faster and a lot more furious, but just think about it this way, right? If, just as an example, if CNBC and Goldman Sachs says, oh, buy Apple. Apple is a perfect example. Let me switch to the Apple chart. Right, this is a chart of Apple, in which case, let me just talk about Apple since we're on this chart already. If you look at this 590.36 level, it looks like it held pretty well. I mean, it's been holding for about 3 days already. And then we have this 581.07 that it broke through, and now we're into this double moving average here. So Apple only went down $8. The market went down over 3 points, and Apple only goes down $8. What does that tell you? It tells you that if the markets catch a bid tomorrow, this basically the stock is in relative strength. So any type of bid, Apple can still have the potential to get into the 607.62 level. I would not short a stock that has so much strength, such as Costco. But Costco went down if you looked at Costco. But just as a rule of thumb, you want to pick on the weak if you're going to short. You want to pick on the strong if you're going to go long, right? Okay. So I didn't make that rhyme up. It just happened. In any case, the high of this candle, which was the high of Apple, was $644 per share even. Okay, 644. Guess what? Didn't you hear? I'm sure you heard it as much as I did, that around this area here, maybe around this time here, right before I went to 644 and then reversed completely down, and then they had earnings on this day, and then they popped up, and then guess what? It was all over after that. Now we're bearishly consolidating for another move down, possibly into this 200 moving average. But at this time here, CNBC was saying buy Apple, buy Apple, buy Apple. Apple's going to hit $700 per share. And then, believe it or not, I hear Apple's going to hit $1,000 a share. It's unbelievable. Why are they telling you, who don't pay a fee or anything like that, why are they telling the average person to keep buying something that they're not making money off of? It doesn't make any sense. What makes sense, though, is that they own, because they're huge institutions like JP Morgan or Goldman Sachs, they got billions of dollars. They have huge amounts of shares. I mean, you're talking about thousands, if not millions of shares of a specific, a stock or ETF, and they want you to start buying. Why? Because believe it or not, in the stock market, in order for you to sell something, you need to have a buyer. Without a buyer, you can't sell it. And the same goes for a buyer. If you won't be able to buy something that someone's not selling. So these institutions are saying, okay, well, you know what? I made a lot of money off of Apple. It's time to offload. I got thousands of shares and nobody's buying, right? So I'm going to release these news and tell everybody I'm going to upgrade Apple to $700 a share. Oh, not too many people buying. You know what? I'm going to upgrade it to $1,000 a share. Now everybody starts buying into Apple. Now I can start selling my shares to all you retail traders, right? Not knowing. And once I'm done selling all my shares, then I let Apple go, and then Apple just tanks. You see how that works? Now, the inverse is true, okay, for the SPY, which is what we were looking at just now. Now, this is a daily chart of the SPY. The inverse is absolutely true. So if Goldman Sachs is saying sell, 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 what is that telling you, right? It's the same for the inverse, okay? So I'm not saying, we are in a confirmed downtrend. There's nothing telling me that we've reversed trends yet, right? But what this is basically telling me is that you need to be on guard. You need to have your stops in place. Put your stops in the money because the markets could definitely continue down lower, or Goldman Sachs is just playing a game with you, which is institutional game playing. Again, why would they give you free information? They're in it to make money. So they want you to buy. I'm sorry, they want you to sell short. Okay, they need you to sell short. I don't know the reason. Maybe they have options out there, that contracts that they've written. You know, for the most part, they need you to sell short. They want you to sell short, and that's why you have to be cautious, because the markets could just pop right back up without you even blinking. Boom, back up again. You just don't know. So you want to be cautious. Okay. Now, those are the things. We consolidate before another down move. We totally negate this move here, or and that's pretty much, or we just continue lower. I don't think we're going to go lower that much, but I'm pretty sure we're just going to continue lower like that. But remember, tomorrow's Friday, and Fridays are normally low volume days. It gives the institutions a chance to prop the market higher. In addition to that, we have conflicting information, simply because who knows, nobody wants to hold over the weekend, then we're going to have another sell-off. But normally after a big move like this, we have what you call a flat day, meaning a day we just kind of low volumed out, nothing big's happening. If we get some more bad news, then we're going to come all the way down. Now, the reason why we had this down move here was because there's a rumor that we're going to get downgraded banks, right? It's buy the rumor, sell the news. Basically, that's what it is. In this case, it was sell into the rumor, and then now they're gonna buy the news. Okay, so it's inverse in this case. Okay, so that could be a possibility. So that's why, if you were short with me at this level here, then just put your stops either at break even, or you put in the money stops. Okay, if you have in the money stops, if this thing reverses against you, you still profit, and not a big deal. Okay, so you just want to be aware of that. Let's take a look at the dollar. Can't believe I just spent 12 minutes talking about the SPY. Let's get this dollar thing out of the way real quick. We have this candle here. Don't pay attention to this. This is after hours, right? So we had this falling wedge here, as I discussed in the previous video. We didn't quite make it to this level here. This level is pretty much negated. In my opinion, we didn't quite make it. However, I did show you on the UUP that we was into pretty good support, and then we did get a bounce. So what did we do? We basically broke out of this descending wedge or descending triangle here. Normally what you get is a retest before you go higher, and the retest is normally in a form of at least a 50% or 25% retest, like I've explained to you in previous videos. A lot of times that does happen, and then from there the dollar should go a little bit higher. So what I'm thinking is we may actually retest just a little bit, possibly off this 20 moving average, consolidate a little bit before moving higher. I mean, this was a big move on the dollar, so a retracement would not be out of the question. Now again, the dollar could still continue higher tomorrow. You just never know. If bad news comes in threes, meaning you got bad news, markets can recover. You got another bad news, markets are going to get hesitant, and then the third bad news, you're going to have just a complete sell-off, and then it's going to be a bloodbath, kind of like what it was today. Okay, so that's the dollar. But just keep in mind that the dollar also have this 85.23 level that we have to keep an eye on. All right, so let me show you the UUP. Now here's a UAP, and then yesterday, let me load my drawings. I don't even have my drawings loaded here. We have this pivot point here plus this 50 moving average. That's telling us this is pretty darn good support, and that's actually what we got. And then we bounced up, and now we're almost into this 20 moving average, which could possibly pull us back a little bit. And again, the dollar is inverse to the market. Therefore, if the dollar pulls back, then the market will catch a bid. And I wouldn't be surprised, because in any big move like this, you're gonna expect a pullback. Now, if it's very bad tomorrow, meaning more bad news comes out, then we could actually pierce through this 20 moving average like butter. And if that happens, then your next support line will be all the way up here, in which case we could hit that 200 moving average on the SPY a lot earlier than I expected. But normally, after a big move, we have a downturn this way. I just wanted to kind of remind you guys, this is why I'm so specific on patterns playing with volume. You remember I kind of told you yesterday in yesterday's video, if you looked at yesterday's video, this is somewhat of a spinning top half doji type of reversal candle here. And the one thing that I liked about it was this volume. If you look at the previous video, I did talk about this, and it was higher than the previous 3 days, which indicated a possible reversal. I did not think, I'll be honest, I didn't think it would go down this much. However, a reversal wouldn't have been out of the question, because we had volume on a doji type candle. All right, this is why I think it's so important that volume has to be in any candle pattern valid before a reversal can take place, or the chances of your reversal taking place based on an exhaustion volume like we had yesterday. Okay, so keep that in mind when you have a reversal pattern in a candle pattern, whether it's engulfing, whether it's a shooting star, hammer, whatever. You need to have it on volume, and that'll give you more of a odds in your favor that it should turn over. And that's, obviously my opinion. Okay, so let's get into some stocks here. All right, so as you know, I took a short trade on AXP, which is American Express. All right, so I had this 57.27 level, which was a pretty strong resistance level. It actually broke through and closed above it. I didn't really like this level too much, but when we gapped up today, right above it, and we could not tag the 618 Fibonacci retracement, it looked really, really weak to me. So I took a short trade on AXP, and then this is why I sold the first half, because I'm in pretty good profit already. Now, could AXP also get another retracement back up, maybe back to this 57.27 level? That's definitely possible. I wouldn't be doubtful about it. All right, but could AXP continue down at least into this 20 moving average? Yeah, I can see that happening definitely. So again, I took half off the table. Basically, I sold half my positions on I covered half my position on XP, and I'm letting the other half run with a break-even stop. So if it does go against me, I break even, no problem. I still made profits off the first half. If it continues down, then I'll be smiling because I'll be profiting even more, and that's how I play this game. All right, so I talked about Apple and I talked about AXP, and now I want to put your attention to Walmart. Walmart is still at this level, $70.56. Guess what? If it doesn't reach the $70.56 level, say within the next couple of days, I'm probably going to have to recalculate after that. Why? Because it's been consolidating for quite a long time. We have this up move, and now we're consolidating for possibly a breakthrough of the $70.56. I don't know. I mean, if the longer it consolidates, the more it builds power. It's kind of like a spring, and the more it stretches, the more it has power to break through the roof. In addition to that, Walmart only went down 82 cents while the markets were down $3. Okay, to me, the stock is still in relative strength. It's still holding the 67.70 calculated level here. I mean, it's amazing how these calculated levels are just holding up, either as support or resistance. It's just, it blows my mind sometimes, but that's exactly what it's doing. So if we can catch a bid into the $70.56 level, say by sometime middle of next week or so, then maybe I'll take a short position. Again, this is a stock in relative strength, so shorting a stock in relative strength is a lot more dangerous than shorting a stock in relative weakness. Okay, so keep your mind on that. I just want to take a trade on Walmart. I don't know, something's driving me or drawing me to the Walmart trade. I don't ask me why, but this is what I have my eye on now. Now, all the other trades that I talked about yesterday, none of them hit their target points. So none of them, every single stock that I talked about in the previous video is now invalid. All analysis will have to be redone at the end of this week, which I'll release probably sometime this weekend. Okay. That's right. I wanted to talk about gold. All right. So yesterday I said, the day before yesterday I said gold broke down through this trend line here, and then we got a confirmation breakdown. Yesterday's video I said we're trapped between these two moving averages here. So pretty much gold is in in weakness, and then boom, we had a $4 drop in gold, which is a huge drop. Gold is definitely, in my opinion, going to retest this 148 level, which is this calculated level here, right? To get you an exact price of this calculated level, is 149.12. So it has a potential of retesting this 149.12 level. So gold could continue down. The one thing I do like about gold is it's trading definitely with the market. The markets were down, gold went down. That means, or that indicates to me that it's deflating right now. We're in the middle of a deflationary standpoint. If gold was up and markets were down, that would be inflation in my opinion. But gold is coming down with the markets, so that means deflation. That means the markets are in a weak standpoint. Again, Goldman Sachs is the only thing that's thinking me otherwise, because I want to be a contrarian against people like that or the news. Okay. Other than that, if you're not already short, I would not be chasing the market. That's my opinion. Okay, I'm not making a recommendation or anything like that, but the move has already been made. What I would wait here, let me show you. This is what I mean by don't chase. Market already came down. The move has already been made. I would not go short. In my opinion, I would not go short. When would I go short? If the markets are still in continued weakness. I would wait for a consolidation pattern telling me that the markets have more downside. Then You know, when it looks weaker, weaker, I get some sort of reversal candle or some sort, then I enter in a short. Why? Because the institutions can easily prop this market back up. I don't chase, or I try not to chase. I try my hardest not to chase, unless it's a reversal pattern. Okay, I do not chase. Now, this move has already been made. Wait for a consolidation period before shorting again, or you wait till a major support level is hit, maybe this gap window and this 200 moving average, and then go for a long, short-term long play, right? But again, wait for the pattern to form. Wait for the market to do what it does, or it's going to do. Wait for the volatility to set in. Normally, around the week of 4th of July, volatility will definitely decrease. So, if you're an options player, you want to be aware of that, because that'll definitely decrease the value of your options if volatility decreases. It's Vega is going to destroy you. If not, Theta is also going to destroy you, because if you have low, if Vega is destroying you during the week of 4th of July, then basically you got to hold on to that short a little longer, those puts a little longer, and then at the same time Theta is eating you alive. So options it's a bit more complicated, but if you are in the options game and you're playing just buying puts and buying calls, then that's the kind of thing that you'll have to be aware of. All right, so running out of time here. So this is your 7-minute market update. God bless you all. Thank you for watching, and I hope to see you in the next video.